Good afternoon. Let's do some business right here. We are doing it live in the 4 o'clock hour right here. Mottek On Money on 790 KBC. Right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money live on the air. 790 KBC streaming live online worldwide at kbc.com. And yes, you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Kicking off the new week and the new month of June, stocks closing mostly higher today in what turned out to be a wild day on Wall Street, which included some kind of crazy technical glitch at the New York Stock Exchange right off the bat. The NYSE now reviewing any trades potentially affected by the trading glitch. The incident impacting shares of 40 stocks, we're told, trading across the New York Stock Exchange platform, including Berkshire Hathaway's Class A shares. That's the most expensive stock on the New York Stock Exchange, the one that Warren Buffett is in charge of. It saw erroneous steep declines, as it turns out. In addition to Berkshire Hathaway, shares of Bank of Montreal, Barrick Gold, and Chipotle Mexican Grill were impacted by this glitch, and so were shares of AMC Entertainment Holdings and GameStop, a couple of the meme stock names. On the horizon this week, we'll be getting new readings on the economy, including the jobs report, the so-called big enchilada of monthly economic reports that'll be released first thing on Friday morning. The Dow coming in for a closing gain today of 100, make that a closing loss of 115 points. That's kind of a head-spinning day. It had been down more than 400, but did close off the worst level of the day. It did move off the worst level and ended up down 115 points to 38,571. The S&P 500 managed a closing gain of 6 points at 5,283, and the NASDAQ moved up 94 points at 16,829. Now clawing back most of the previous session's losses in the final hour of trading, the S&P 500 turned positive. The month of May went into the Wall Street history books on Friday with the S&P 500 booking a gain after erasing earlier losses shortly before the bell. And we did see the month of May turned out to be a winner with the S&P 500 of 4.8%. The NASDAQ was up 6.9% and the Dow up 2.3%. Big news south of the border, as you've been hearing, exchange-traded funds that track Mexican equities suffering their biggest daily drop in more than 4 years today after Claudia Sheinbaum's victory in Mexico's presidential election. No concerns about her party's landslide win possibly leading to constitutional changes, which would impact the economy. The largest U.S.-traded Mexico-focused fund, which has more than $2 billion under management, slid nearly 11%. That was its biggest daily percentage drop since March of 2020, back during the pandemic shutdown days. The Mexican peso, meanwhile, was tumbling, weakening by more than 4% today, and now it's at 17.70 against the U.S. dollar. Its worst daily showing for the currency since June of 2020, taking us back to the pandemic days then. The price of oil pulling back today. We saw the price of oil in New York down nearly $3 at $74.22 a barrel. And that's the biggest drop since January 8th and the lowest settlement price we've seen now since February 7th. Brent crude in London, the global benchmark, pulling back as well, down nearly $3 at $78.36 a barrel. Getting some breaking news here on the restaurant front. Rubio's Coastal Grill shutting down dozens of locations here in California, including 24 across Southern California, according to ABC7. Spokesperson for the restaurant said a total of 48 California locations have shut down due to what the company calls the rising cost of doing business here in California. 24 of those closures are in San Bernardino, Orange, Los Angeles, and Ventura counties. To repeat, Rubio's Coastal Grill shutting down dozens of its locations here in California. Checking the business of show business now, Skydance Media back in the spotlight, revising its offer to buy Sherry Redstone's firm National Amusements and merge with Paramount Global, giving Paramount's non-voting shareholders the option to cash out at a premium, according to the Wall Street Journal. The Journal reports after a prolonged period of speculation and uncertainty about what will happen to the media conglomerate and film producer, Paramount's investors might want to take the improved offer. They've been frustrated by the slow sales process, according to Barron's, that reported that back in April. Billionaire investor Warren Buffett sold off much of his Paramount stake in the first quarter and probably divested the last of it in the second, according to the Journal. Well, the meme stocks are back in focus, most notably GameStop. Investor Keith Gill, who goes by Roaring Kitty on social media, posted an alleged screenshot of his position in the video game retailer on Reddit. It was the first time he had done that since April of 21. And in turn, shares of GameStop surged today, hit more than $40, more than 70% higher than their previous close. It looks like GameStop ended up about 21% today. And now Morgan Stanley's E-Trade platform is reportedly deciding whether to ban the meme stock pioneer Keith Gill, better known as Roaring Kitty, after recent purchases he made of GameStop options raised questions about possible stock manipulation. This news being reported now by the Wall Street Journal this afternoon. The Journal reports the discussions after Gill resurfaced online last month on X, formerly known as Twitter, and launched a fresh meme stock frenzy, as you've been hearing. New concerns about the nation's debt load in all this. According to the Congressional Budget Office, America's credit card bill will hit 116% of the nation's economic output in 10 years, and the situation might actually be worse than that. I'll talk about that and more with Veronique DeRugy, Senior Research Fellow at the Mercatus Center at George Mason University, George Gibbs Chair in Political Economy at George Mason, and nationally syndicated columnist. A lot of incidents, crime incidents over the weekend impacting businesses. I'll talk about that and the latest with the Honorable Dennis Zine, former LA City Council member, longtime LAPD Sergeant, current LAPD Reserve Officer. The Honorable Dennis Zine will be back on the line with me later this hour. But first, on your money, the markets, the economy, the whole works this afternoon. Joining us live now is Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. Jim, thank you very much for coming to the line this afternoon, sir.
Well, thank you for having me, Frank. We had quite a good month in May, picking up for the weakness that we had in April. As you said, the S&P up, almost 5%, the NASDAQ up almost 7%, the Dow up 2%. So a lot of the first quarter gains, which were quite robust, gave back a bunch in April, but the rally in May has continued. And it's been interesting to see as rates have moved up over the course of the year that the markets, really globally are higher, which is really great to see because, several years ago, as rates were moving up, the markets were heading down. So I think the economies globally are overall in pretty good shape, and that's why you're seeing markets move higher, despite the fact that interest rates are moving up as well, although slightly lower the last couple of days in May. So I think markets are in good shape. I think if you're allocated properly, you're getting both good returns of fixed income through bonds and growth equities, which again are beating value, which has been going on for a long time, and that probably continues. Tech has been probably the best sector to be in based on size. Utilities have done well. Energy did better earlier in the year, but the prices come down, which also is good for the rate of inflation. The marginal rate will probably come in. So we'll get the big inflation number or the jobs number this week, and we'll see where interest rates and markets take us.
On the air live with Jim Hausberg, Hightower Advisors, the Hausberg Group in Beverly Hills. It's great to have you back with us here, Jim. And so we had those record highs in the month of May, and then we saw some selling in May and going away. What do you see ahead here in June with this volatility picking up now? And, of course, a lot on the radar screen. Still a lot of concerns about where inflation goes from here, the Fed's next move, whether they'll cut rates, hold steady, or maybe even raise rates at this point. What's your view of what's on the table here for the month of June?
Well, I think volatility continues, Frank. I just recall last Friday I was out of the office a little bit. Markets were down. I got back and the Dow was up 500. So, yeah. and not a lot of news. Of course, that was the end of the month, and you get a little window dressing and people moving out of certain things. Look, I think the AI play is big. It's not just NVIDIA. It's others. Money's being spent by companies in all different sectors. Utilities, which are usually a defensive sector to invest in, people tend to buy utilities when rates are going down, concerned about the economy, but now they're becoming somewhat growth stocks because the power of all these AI chips, is a big plus, a lot of energy usage, and it's a real positive for that sector. So that's an area that, at least in the past several years has not been of interest, but it's showing more interest today and, up something in the area of 12% year to date. Telecom continues to be strong, companies like Meta and so on. The consumer outside of Amazon, not so great, but, I think big tech continues to be the place to be. Industrials are looking better. Financials have been strong. JP Morgan, Goldman Sachs, these stocks are all moving higher. I think there's a sense out there, Frank, that rates will be lower towards the end of the year. Earlier in the year, we thought we might get 5 or 6 rate cuts. I think that's off the table, more in the 1 to 2 area. But I'll take that. As far as rates going higher, I don't see it. In fact, if the economy does slow a little bit from here, it wouldn't shock me. That might lead to rates going down even more. But that's where we stand right now. I think markets are in pretty good shape. But as always, over the near term, volatility is something that you have to get used to.
All right, let's talk about the Magnificent One, NVIDIA, which popped today again up nearly 5% to up nearly $54 to $1,150. It looks like here at or near its all-time high here. What's the view on NVIDIA, and do you like that one and all the Magnificent Seven stocks at this point?
Yeah, I mean, the story there is incredible. I mean, it was up 27% for the month, several 100% over the last couple of years. It's going up because the numbers are going up. One thing about growth stocks is, if you look at the earnings and you look at the earnings growth, you may have a bigger multiple on a stock, but when a company is growing at the pace that's growing at, the multiple is warranted. So I think all things look quite good there. 1,100, whatever it is, I think it's split in 10 for 1, so it'll be a $100 stock soon. So that's obviously something that may get more retail investors interested. But that's the space to be in. There are competitors. I think ASML, the Dutch company, has done very well. Some of the old line U.S. companies still doing well. Qualcomm's had a big jump. Intel can't seem to get out of its own way. It used to be the leader, Frank, some 20 years ago in the chip space, but it's just missed it, and stock has underperformed. Hard to believe that was a $70 stock some 4 years ago and is now a $30 stock. So
Right.
It's really quite a disappointment for one of America's great companies. So continue to like it. I think value looks interesting to me because it's a little out of favor. Berkshire's always a good place to be, but I think some of the industrials look attractive. I'd look elsewhere, not just big tech, but certainly NVIDIA, to answer your question, is a keeper, and would buy the stock on weakness.
All right. What about that? This happens from time to time, and it always makes news when we get these technical glitches on Wall Street today, impacting a number of names on the New York Stock Exchange. What was it like to be on the front line of all that today, and what happened?
I don't have the answer as to what happened, but I'm not surprised that it doesn't happen more often, even though it doesn't sound great. I don't know how, you get these glitches and what really happened in 3 or 4, was it 40 stocks, they said. But it was fixed. Nobody lost money. If someone made a trade at a price that the stock really wasn't trading at, I'm sure Wall Street will get in there, and the back offices will be busy, and I'm sure they are, and we'll get everything right. But hopefully this doesn't become commonplace.
Yeah. So apparently Berkshire Hathaway was impacted. That is, as we like to mention, it's kind of fun to note this. It's the most expensive stock on the New York Stock Exchange. It was down nearly $2,100 today to $629,020 a share. That's the one that never split. That's Warren Buffett's Berkshire Hathaway. They do have the Class B shares that are a bit less expensive. Now, what about these meme stocks that are getting new attention? GameStop and AMC, once again, this Reddit rally craze picking up again with this guy tweeting out and so forth on social media. What are your thoughts about what's going on with those names again?
Frank, I think you know my thoughts.
Yeah, go ahead. Lay it out.
I'll just say
Lay it out.
Look, here's the thing. I love the fact that the retail investor is getting more into the markets again, and you got to be a little cautious. But there's a lot of interest out there. I walk around today. I'm talking to some young people I met on the street, and they're asking me about the markets, and they're interested. Do you own this? Do you own that? I think that's really a great thing. But if stocks are being hyped up, on the internet, we all saw what happened last time with these meme stocks. So to me, it's just outright gambling. You're betting on, some tweet or this guy's positions and putting it out there, and the shorts are, getting hurt, which is okay. But we all know how it ended, and I would make the assumption that it will end again. Stocks like NVIDIA are going up at unbelievable rates because of the growth. I think they did $28 billion in the quarter, double from where it was a year ago. Those are real. GameStop, I don't know where they stand. AMC and some of these other meme stocks, the fundamentals just aren't there. I think DJT, Donald Trump stock, was part of that craze too. There's no real great fundamentals. I'd avoid them, even though, I wouldn't be surprised if they trade higher, but the volatility in there is too much for me.
On the air live with Jim Hausberg, and we're all nervously watching what's happening in the Middle East. More terrible news. 4 more Israeli hostages have died in Hamas custody, according to the Israeli military. We're following developments there very closely. Jim, we've seen the price of oil pull back despite the upheaval in the Middle East, the lowest price since earlier this year, and the big oil names have been hit today. Chevron, for example, down nearly 5 at 157 and change. What about oil, which, of course, has been driving this latest spurt on inflation? And any thoughts about what's happening on the oil front at this point?
Yeah, well, I would just say this. Oil was up, I think, 16% in the first quarter, all very much tied to the war in the Middle East. OPEC has cut, their production and continue to keep it there, and prices went up. But all of a sudden, we're now at a point where OPEC's going to continue to cut output. But I guess the only thing I can think of, and I don't know this, is that there's just an oversupply of oil on the market right now. And as a result, it's coming down and it's affecting these stocks. But, these stocks have done well. Last 12 months, I think energy stocks as a sector are up 18%. This year, they're up 8%. These are very good returns. So despite the fact that oil's dropped, and you said Chevron today was down 5, today we had all the stocks in Mexico go down on the election. A lot of this stuff is short term, Frank. It really is. It's based on a headline here or there. But the trend is still up in energy, good dividend paying stocks. I'd probably buy them on weakness. But I think the Saudi Arabia today sold shares in their big oil company, may have put some pressure on some of those stocks. So, the war in the Middle East is just horrible. The hostage thing's horrible. I feel bad for everybody. And, we just hopefully we can get cooler heads, as I say every time I'm on your show, and live in a peaceful world. That'd be a pretty nice thing, don't you think?
Yep. We're watching Boeing. Boeing, of course, was heavily followed during the height of the aerospace era here in Southern California. A lot of people still follow it closely, of course. A great American company that's had a lot of difficulties and now back in the spotlight with the Starliner launch. They're going to make a third launch attempt on Wednesday, we're told. They had to scrub for the second time over the weekend. The reason was a United Launch Alliance, a ground computer launch sequencer. What about Boeing here at about 184?
Yeah, I like the stock. I bought some recently, went a little lower. Now it's moved higher. Largest exporter in the United States. There's 2 companies that make planes. I mean, there's some smaller ones. You got Embraer in Brazil, but you got Airbus and Boeing. That's it, Frank. Nobody's buying planes that are built in Russia. They're not buying planes that are built in China. It's either Boeing or Airbus. It's going to continue to be those 2. Airbus has had its issues. Clearly, Boeing has had its issues. But longer term, with their defense business, unfortunately, with all the money that's being spent on defense and their aerospace business, I don't know, to me, I know they've had some questions about cash and they burned through and they always had issues, from the safety perspective. But I just think that this is one of America's great companies and will always be. And I'd buy, that stock on weakness as well.
All right. At this point, anything else? Any other places where you'd be putting money now and or taking it off the table?
Yeah, well, Frank, I've said this many times on the show. I really like dividend-paying stocks. They just haven't been the place to be this year, so I'll continue to like those over time. It's great to know you can buy a company that's doing so well from their cash flow that they're able to pay shareholders a dividend out of that cash flow and plus continue to reinvest in the business. Apple's a good example. Microsoft's a good example. Meta just announced their first dividend. So I think companies that are growing their dividends in excess of 10 to 15% a year, even though it may not be a high yield, are the highest quality, the safest companies to buy. United Healthcare falls in that category. A company called Cintas that makes uniforms. Intuit has been a great, great company to own. And there's others out there. Marsh McLennan. Look for companies that are increasing their dividends. And I think you're going to do very well in a market that continues to be volatile. Because when things aren't going well, you want to own the highest quality companies. And I think those are the best place to be. I continue to like technology. Clearly, some of these have made big moves, but once that's if you get a little bit of a pullback, as I was saying, I would add to those stocks. And Berkshire, as you mentioned before, outside of the glitch, Warren Buffett's not going to live forever, but I think that company's in great shape. People like to invest in private equity. We hear that term all the time, and investors really can't figure out a way to do that because of the high minimums. But, Berkshire Hathaway to me is publicly traded private equity. They own all these private businesses that just kick off a tremendous amount of cash flow. Plus, with their cash, they own a lot of publicly traded companies. One of the largest shareholders in Apple, which, by the way, is trading up quite a bit in the last month. I think was up 12, 13% in May after being down earlier in the year. Yeah. So I continue to like that stock. I think that's just a very, very safe place to be. And
Jim, thanks very much for taking the call here. Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. Jim, always great to speak with you. Thanks very much for taking the call today.
Thank you for having me, Frank.
Thanks a lot. And let's get right out to the freeways now on 790 KBC. Friends, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became a lawyer to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is hit that button. Believe me, you'll feel a lot better having set this up for yourself and your family. The number to put in your phone is 833-88-SHARK. That's 833-88-SHARK. With the population exploding and increased vehicles on the freeways, be proactive, prepare for the worst, and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 1-833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Mottek On Money continues here in 790 KBC. Good afternoon. Mixed start to the new week and the new month of June. The Dow coming in for a closing loss of 115 points at 38,571. Had been down more than 400 early on. S&P 500 up 6 at the close at 5,283. And the NASDAQ up 94 at 16,829. It was a roller coaster ride for stocks today. The yield in the 10-year note now back down to 4.39%. Chevron of drag on the Dow today, down nearly $5 at 156 and change. Dow Chemical down $1.56 at 56.07. And Caterpillar taking a tumble today, down more than 7 at 331 and change. Boeing down nearly 7 at 184 and change. Checking the cryptos now, Bitcoin down 152 at 68,998. Ethereum down 5 at 3,766. And Doge at 16 cents. And now the latest news here on 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. Turning to crime now. Have you heard about this? Thieves have targeted several SoCal Lego shops in a string of burglaries. Also, thieves dressed as construction workers broke into a Studio City home over the weekend. Let's bring in the Honorable Dennis Zine now, former LAPD sergeant, current LAPD reserve officer, also former Los Angeles City Council member. The Honorable Dennis Zine is back on the line. Dennis Zine, thank you very much for taking the call. Give us your reaction to these latest reports.
Well, Frank, we see the trend continuing, whether it's commercial crime, residential crime, people on the public transit system, the metro system. It just continues, and it's not stopping. They're having a difficult time controlling the situation, difficult time recruiting police officers, and it's a trend that doesn't seem to be going anywhere except continuing. And that's the sad part. From the people who are not conscious of it, who are not aware of it, they become the victims. But the smash and grabs continue. The district attorney continues to shy away from his responsibility to enforce the prosecution of these individuals who commit these continuing crimes. So whether it's an actor who finds his catalytic converter being stolen and gets shot and murdered in front of friends downtown Los Angeles, or these other crimes that are currently happening, it's a trend that doesn't seem to be improving as the people of Los Angeles seem to purchase more and more weapons and more concealed weapon permits, putting applications into the local law enforcement agencies because there's a legitimate concern and fear. And when public safety is out of control and you don't have the resources to really address it appropriately, these are the consequences.
Susan Shelley from the Southern California News Group wrote a powerful op-ed article about what happened there. You mentioned that actor who was killed This was that situation that we discussed about a week or so ago when he found some people stealing the catalytic converter from under his car. Johnny Wachter, according to Susan Shelley's article, was in the wrong place at the wrong time, and that is California in 2024. That is quite a powerful headline there, and tragically, any updates, Dennis Zine, on that situation there, and have any arrests been made in that case?
Well, no arrests at this point. The homicide detectives are investigating, checking any kind of video or any type of information. Obviously, it was very, very late, 3+ a.m. in the morning when that occurred. A tragedy occurred. People are speaking out on behalf of this slaying, absolutely unprovoked, other than the individual wants to steal a catalytic converter, which is epidemic in Los Angeles City. But this tragedy did not have to happen. An aspiring actor who wasn't, in fact, an actor and worked at a bar off duty to supplement the income and walking people to their cars so they would be safe. This is a tragedy that oftentimes continues, and it just doesn't get the publicity or the recognition it gets and the support from the criminal justice system.
And at retail stores, we see increasingly armed security at the front door, and even the batons, all kinds of equipment now on the belts of these security guards, including, of course, firearms. And we've also seen recently videotaped confrontations between store clerks and people shoplifting. How's this evolving, Dennis Zine, and what is your message for the business folks out there who are wrestling with shoplifters and all sorts of crime at the moment?
Well, Frank, we see many businesses closing their doors. We see many businesses closing, saying it's not safe to be secure here in Los Angeles. And a lot of this can change if we have prosecution of the criminal element in our society. And we have a district attorney who doesn't do the job. And if that job was done and incarceration took place, we wouldn't be having these continuing trends, because these people are committing crimes over and over, and not even a slap on the wrist. It just goes and it continues. It's like the flowing waves at the ocean. They just keep coming in. These criminals continue to commit these acts, and there's really no deterrent. You have insufficient number of police officers, insufficient number of dispatchers on 911 lines, and it's really a system that's crumbling. People need to wake up, and they run out and buy a gun and get a CCW and think that's going to protect them. Not in every single case. You need to have law enforcement aggressively enforce the law, period. And that will bring an end to it, along with the prosecution of these people who commit these vicious crimes over and over, and they don't seem to find any consequences when they do those acts of violence.
On the line with Dennis Zine, and of course what's been happening at the universities, these clashes we've seen with protesters and so forth, and students not feeling safe on campuses, and tremendous vandalism in the aftermath. I've been talking to some folks about that just today, and how traumatizing that was to go through that, and people not feeling safe on the university campuses. In the aftermath of all this, Dennis Zine, what do you think is going to happen?
Well, what we know, Frank, is it's been documented. A lot of those protesters were not students. Those were outside agitators there for a specific purpose, to cause this disruption, not only in California, but across the country. And there are organized groups that want to do that. They want to basically dismantle what we have in our society as a safe society and democracy. So while some students were caught up in this, it was orchestrated. Clearly, I've got documentation from investigations that show it was clearly established for a particular purpose. And we see this happening over and over. People need to wake up to the reality. There are people who don't like our lifestyle and the freedoms that we have in America, and they're trying to overturn them. So this is part of it. The people from the universities are being victimized. They say victimized because of the criminal justice system. They committed violations. There's consequences. When you're an adult in college, there's consequences when you do wrong, and those consequences are being administered, and the administrations need to follow suit and discipline people when they don't do what they're supposed to do. The students, and then the outside agitators, let the criminal justice system deal with those folks.
On the line with Dennis Zine, and getting back to that important DA race, you mentioned we all of us have an important decision to make in November, so there will be a choice, right? There'll be a runoff in November between the incumbent DA and a veteran federal prosecutor. How do you see that shaping up?
Well, I hope and pray, honestly, I hope and pray that the district attorney, George Gascon, is defeated. We have a good man who's running against him, Hodgman. He's a good man. I know him. I've met with him. When you look at the district attorney's office and you find that 98% of the district attorneys, the deputy district attorneys, do not support their boss, that's horrendous. So we need to change the district attorney, and that'll be the beginning to bring back public safety in Los Angeles, not only city, but Los Angeles County. Long overdue.
The Honorable Dennis Zine. As always, Dennis Zine, thanks for coming to the line here. We do appreciate it and look forward to many more conversations with you. Hopefully better news next time around. That is the Honorable Dennis Zine, former Los Angeles City Council member, longtime LAPD sergeant, current LAPD reserve officer. We thank you, Dennis Zine, for your service to the great city of Angels, and thank you very much for joining us here this afternoon.
Frank, thank you, buddy. Pleasure to be with you. Thank you.
Thank you. Thank you very much. And out to the freeways now, 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. New concerns about the nation's debt load. According to the Congressional Budget Office, America's credit card bill will hit 116% of the nation's economic output in 10 years. The situation might actually be worse than that. Let's bring in Veronique DeRugy, Senior Research Fellow at the Mercatus Center at George Mason University, George Gibbs Chair in Political Economy at George Mason, also nationally syndicated columnist. Veronique, thanks very much for taking the call. I know you always do a very, very thoughtful analysis of what's happening here. All of us taxpayers here eager to hear your update now on what's happening with this enormous debt load we're facing.
Well, thanks for having me. The debt we're facing is already enormous. I mean, our debt level is 100% of GDP, roughly, and it's heading to under very, very unrealistic assumption and rosy assumption, because those who make the assumption, I mean, they're not trying to misguide us or misinform us. It's hard to make prediction, but it's already heading to 166% of the economy, and that's because of overspending. It's just like this year alone, we already have a deficit of $1.6 trillion, and it's heading really quickly to $2 trillion in terms of relative peace, and with the economy growing, and we're out of an emergency, but we've been out for quite some while, and deficits should be going down, and they're going up.
So this Congressional Budget Office, we're told, is nonpartisan, right? So politics is supposed to be out of this. So kind of just a cold, hard look at the facts, and it's actually pretty rosy, though, right? A lot could go cattywampus, could go sideways here if it doesn't play out the way they think it is. Tell us what are some of the scenarios?
Well, so the Congressional Budget Office is bipartisan. It actually tells Congress tells it how to score things, but the way it's been directed to score a lot of the bills is to assume that what is in the legislation right now is what's going to happen. So, for instance, take the Trump tax cuts, which are some of them are set to expire in 2026. The CBO scores when it looks at the projected path of the debt, it assumes that these tax cuts are all going to expire, and hence revenue are going to go up. The reality, and we all know this, is like a lot of them are going to actually be extended for good reason, for economic growth reason, and as such, the revenue is not going to materialize. So that's one of the constraints that the CBO has, which very often derails its plan. But it's also, while we know emergencies happen, on average every 10 years. I mean, you never know if it's like a big one, right? I mean, it was impossible to predict the pandemic. The CBO can only do as much as it can to actually predict the path of interest rates or even of inflation, right? It can do more or less looking at what's just happened and where the policy is going. But so what it means effectively is like, and that is true, by the way, of all projections. And when people tell you that they know for sure, I mean, you have to make some assumptions. And so right now it looked on the pretty kind of rosy assumption. It looks pretty grim. And when you change the assumption, to its credit, the CBO has done this. It's actually looked at different paths, like what happened if the productivity of labor is not as much as we think it is. What happened to the deficit, or what happens if inflation doesn't go away as much as projected, or what happens if interest rates go up more than currently projected? What happens? And you see immediately that things can get worse, like really quickly.
On the air live with Veronique Derougy, Senior Research Fellow at the Mercatus Center at George Mason University. Her latest op-ed article on the fiscal policy in Reason.com is titled "The Congressional Budget Office's Alternative Scenarios Forecast a Dire Economic Picture." Now, the CBO, the Congressional Budget Office, also did an assessment on the so-called Inflation Reduction Act, which some have called the Inflation Increasing Act.
Yeah.
What about that? What was their assessment of this, and how are they? What was their assessment, and is it playing out as they indicated?
Well, it was assessed assuming, for instance, the Inflation Reduction Act had a bunch of energy tax credits in there for green energy, and it made some estimation based on what the legislators had written into the law about how many people would use it, and how usually traditionally the Department of Treasury enforced them. And in the end, there were just some provision in the act that looked as if it was reducing the deficit, and in reality, for instance, for those green energy, are going to be enormous contributor to the deficit. But again, so the Congressional Budget Office makes mistakes sometimes, but its hands are also sometimes really tied, because they can only score what legislators put in the bill. And then I know that for the Inflation Reduction Act, Treasury also kind of went and implemented those green energy subsidies very differently than people assumed, and that too increased the cost.
Veronique, thank you for being so vigilant for us taxpayers here. Veronique Derougy, Senior Research Fellow at the Mercatus Center at George Mason University, George Gibbs Chair in Political Economy at George Mason, also nationally syndicated columnist. It's always a pleasure to speak with you, Veronique. Thank you very much for joining us live here this afternoon.
Thank you for having me.
Thank you very much. And let's review what happened in a seesaw session today for the stock market, which kicked off the new week and the new month of June, coming off the winning month of May, in which we saw records set for all the major averages. The Dow pulling back 115 points. We were down more than 400 at the worst level of the day. The S&P 500 came in for a closing gain of 6 points, and the NASDAQ gained 94. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon, right here on Mottek On Money on 790 KBC.
America starts the day with America in the Morning.
A report by the State Department released late Monday.
Hi, I'm John Trout, your host for the latest news, politics, entertainment, business, and weather.
With yet another formidable storm developing over the central and southern
Our staff of correspondents provide a fast-paced look at the world with specialized reports from where news
Consumer
happens.
sentiment took a little dip last month, according to the University of Michigan.
Concise, accurate, and fresh each day.
America in the Morning, the podcast, available wherever you listen.